Hey, Corey here, and welcome to the Real Estate Reality Zone. And I'm going to hit the wickets here pretty quickly for you just to get through the summary so you know exactly what's going on in the real estate market and what the trends are very quickly, just a couple of minutes, and not get to just succumb to the fake news and clickbait and all the nonsense. Okay, so let's hit right to it. You can read the key stats up there in a second, but let's look at the numbers real quick. We've got a little bit of increasing inventory. A little bit higher listing volume now than sales. So sales are a little bit dipping from last year. Not great. Last year, by the way, were the lowest sales, I think, since '09, the number of houses bought. The buyers are not happy with the rates, but mainly they're not happy with wages, right? Wages have got to catch up to affordability is the problem. 6.5, 7 is an amazing rate, except that prices already ran up, right? So when prices ran up, 6 and 7 doesn't work with the wages are still back there. And I don't mean wages like go raise minimum wage. I mean like jobs, economy, building stuff, people buy stuff, excess money, that kind of wage that matters. We got to get that done. Single contract status. I wanted to look at a couple of specific things. Price about 4% higher than last year. Even with the lowest buying, we're still increasing value because there's no sellers. There's really no sellers. I know it's creeping, 12% more than last year, but it's just creeping. It's amazing, but nobody wants to sell. But vacancy rate's still very low. You can see just the runaway in price is crazy. House inventory, we need to fix this chart. We'll show it's down. Like it's still very low, relatively speaking. I like this chart too. That shows we're here. So yeah, so we're barely above there, but it's just been meandering its way on with the least amount of buyers in a long time. As soon as we get wage confidence caught up, this is going to come back down again, unfortunately, unless we figure out a way to get more houses out there. Okay? This is what I'm telling you about sellers. I keep saying this all the time, beating this to death all the time. This red line is the number of new sellers per week on the market. And this gray line down here is 2023. The red line is 2024. It's relatively the lowest in our lifetime. So it just shows there's not seller. There are not sellers. Okay? It's still a problem. Here's this contract pending. The sales are just barely above this time last year. But the median price is higher of new contracts. That's what that shows you. I've got some policy watch that you can read. Mortgage interest rate. We do not want to be in the high sixes, some low sevens. We don't want to be here. I know they're talking about, this is up because hawkish and tariffs, and they're bashing economic policy. Okay, we'll see. Worked out pretty well last time. So we'll see what these economic policies produce, but it's always the near-term little glitch, and then it's an amazing benefit to the country. So I'm in favor of the economic policies coming out. But here's what's not said to you. And you can go look this up. Go look up the number of trillions of dollars that was due, came due in treasuries in 2024 that really should have been sent years down the road again, but it was just sent down short term. They were basically deferred to first quarter 2025. You either have to bump them down years again and reconstitute, but you got to sell those bonds to the world or to somebody. You got to sell them, and that means when you owe what we owe, though, you have to increase the rate to get somebody to buy them. So they're not talking about that, I noticed, but I want you to go read that. I never had to be really a bond maturity guy, but there's so many shenanigans going on that I want you to go get smart on when those things come due and what administrations have to do to resell the debt to keep it on the books. Read some about that, okay? It's a problem. It's a problem. We don't want mortgage applications falling, but the mortgage applications falling like end of year. It always falls this time of year. So I'm not worried about that. I don't like the mortgage rate. I do not like the mortgage rate. I wish it would just go sideways and stay there so people can get stable and figure out what's going on. There's a couple of charts there for you. Delinquencies, right? So we're talking about delinquencies jumping. At the end of the day, both foreclosure starts and completions dropped in November. And we're well below pre-pandemic. 31,000 fewer loans in active foreclosure. Okay, pre-pandemic jumped really high, but then fell a little bit. But people are not getting foreclosed. Like the actual completions. The actual completions are all still down. You can look through this data, but nothing in here says there's a problem. And here's history, right? Foreclosure starts versus sales. Sales means it all went all the way to sale. Look, we've been pretty flat. Why are we flat? People have low mortgage payments, do not want to go rent for much higher per month for the same house or go move in with family, and they don't want to get half the house. So they do whatever they can to keep that house. Okay? That's keeping things pretty stable. All right. So you can see the foreclosure starts versus sales. It's all. Does one of these go longer? What do we have to do? We have two charts in there, so we'll get rid of one of those. I like covering population growth just to see where things are ebbing and flowing. We'll get these updated into the last couple of years. But I want to cover foreclosure, right? Foreclosures, inventory, and sales. That's the big one. I want to talk about jobs for a little bit. I want you to get familiar with jobs reports. I talk about a little bit in the report. You can take a look at it. But I personally like a Zero Hedge. I wish you go look at Zero Hedge. They've got some comments here about the November report. I didn't comment on it last time. It was literally talking about 12,000 jobs. But I want you to get familiar with the terms, just real quick. Get familiar with public sector jobs, which is growing government and pensions and things we don't necessarily want. Maybe we do, maybe we not. Maybe we don't, but just at least be aware of it. Private jobs dropped 28. So get familiar with public sector versus private sector. Certainly increase or decrease, but the nature of what's increasing or decreasing is what matters, right? So you've got public and private. You've got non-farm, meaning some of those seasonal kind of jobs you don't want. You want the non-farm. We don't really even count those. And you want part-time versus full-time. And then you've got native-born versus citizen, essentially. Like, it matters. It matters. Sometimes you see this drop in full-time, but a raise in part-time. That's not necessarily a good thing. It's not necessarily good. So get familiar with those. I'm not saying you got to memorize the charts and be a super geek on the charts. I like it here so you can just get the headlines and read some stats, or you can really geek out on it if you want to. But there's some November information here you should have been aware of, especially the revision down was crazy. There's some additional numbers. November jobs coming in great, in my opinion, post-election. Okay, everybody's welcome to an opinion, but it's interesting how that happened. So before the election, we had to revise down 1 million jobs, but then afterward but we'll see what the revision says. No matter what is going on, I want to see the revision. So we're saying it now. Let's see what happens for real when we actually count them all. And I want you to go in here and look at what the composition of those jobs are. Public, private, part-time, full-time, foreign-born, local, what is it? Because the whole H-1B1 conversation going on right now. And then, of course, December. Oh, this was October. Sorry. There's a December one in here. I didn't go to December. I thought I had December pulled up. You can look at the December one, too. It's really good. Okay, really good report. But just be on top of the jobs. If you want to know what's going on about wage, job, people are going to be, wages and jobs mean buyers. So from a real estate perspective, what's going on? Economically in general, what's going on? But we've got to have people hired in the private sector, ideally full-time, because then they got money to pay their bills and have extra. When they have extra, they go buy stuff, they consume, and we have more consumption. Those companies make more to meet the consumption, and they hire people to make more, and then those people have money now and they spend. You see what I'm saying? We've got to have creating things people want to buy in the form of services and products and pay them well so they spend the extra money they need after living expense. Right now, everybody's crammed together with barely living expenses and barely groceries. We got to get above that to have what's called disposable income. Disposable income drives more services and products getting made and drives more jobs. We got to get there, not public sector stuff, okay? My opinion, based on years and years, that's where I think we need to be. As a real estate investor looking for a healthy market, that's where I want to be, okay? Appreciate you going through that with me. Take a peek. Get familiar with those terms if you're not already. Get familiar with the stats if you're not already. See some of my policy watch items, jobs, bricks, CBDC. Just be aware, okay? Appreciate that, and see you on the next one.